Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 17th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media as the Wolfman, where I've talked about the economic data, the geopolitical environments, how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a little bit further and talk about my portfolio and the option strategies that I find to implement around those assumptions we come up with from that market analysis. So without further ado, let's get on with the overall economic data. Across the pond, we've got some CPI numbers coming in from Europe, and it was 0.3%, right in line with expectations. Then we got the core CPI, which strips out like food, alcohol, and tobacco, things of that nature. That came in line with expectations at 0.8%, right in line with what the analyst had. We also here in the United States now got building permits coming in at 1.24 million permits pulled, expected to be 1.3 million. Now that's a little bit lower than expected. And one thing I talk about with the building permits is you can pull as many as you want. It doesn't mean you're going to build on it. And you can not pull as many permits as you want, but you're still going to act on it. Well, guess what? They did on the housing starts, coming in at 1.19 million units started, expected to be 1,170,000, so more than expected there. Also, they revised last month's number up from 970,000 units to 1,010,000 units. So, like I said, just because they're not pulling permits doesn't mean they're not going to build. They are showing right here that even last month they increased that quite dramatically, and we beat the street on the housing starts. So the building permits is a little bit wanky. It is more forward-looking than the starts, but the fact of the matter is they could have a stockpile of permits already. All right. University of Michigan consumer sentiment coming in at below expectations at 73.2, expected to be 79, and last month's number revised down slightly to 78.1. Inflation expectations right in line with what we all have been seeing, and that's 3.1%. All right, so on to the overall markets. We've got crude oil still holding on to that 40 handle. Remember, we've seen drawdown this week already. We saw the Philly Fed manufacturing numbers come in better than expected. So when we're seeing those manufacturing numbers, I talked about this, it's probably going to hold on to this 40 handle, at least until we start seeing maybe more lockdowns or something like that, where we start slowing the economy. At this point, we're starting to generate more traction in the economy. So that's going to hold up crude oil. OPEC starting to ease some of those cutbacks as well. That's not really impacting crude oil at this point. We've got bonds coming off a little bit, broke away from that 180 handle I've been talking so much about. But one thing to note is we've seen this time volume node uptick even slightly higher. It was just a little bit below where we are right now, so it's upticked to very close to that 180 handle. Now, if you've been watching these daily market commentaries, you know you are sick about hearing the bonds trading in the 180 handle. Well, we were just in there yesterday, broke below that. But something to note, when we see that volume uptick, that volume node uptick to where we are now, that is signaling price acceptance. We are starting to get used to this. It's complacent. It's going to want to act as a magnet and trade in and around that area. That's where people perceive value. And we haven't gotten that volume node moving up there because I don't know if we're really going to see a whole lot of people buying bonds at this level because of the yield being so low. They're probably going to go into munis or corporate bonds where you're going to get a higher rate of return on it. Yes, you are going to have to take on more risk, but at 1%, who really wants to hold a 30-year bond for 1%? And that's why we're not seeing that exchange of hands other than what the Fed is coming in and buying. So we are seeing a little bit of weakness today here in the bonds, but that's basically a product of what we're seeing over in the equities, and that is a bit of a move higher here. We've got the gold futures back into the 118 handle. If you remember, we are the 1800 handle, I should say. Yesterday, we talked about breaking below that. The bulls are going to come out and defend that area. There is no volume node here. If you're looking at market profile, yes, it's extended over and above the value area where 70% of the time and volume has been spent. We haven't built up a lot of trade at this level, but we haven't seen these levels since basically 2010, 11-ish area. So therefore, we haven't built up any volume up here. I do kind of think that we're going to see this as the new area of gold futures. Why? Because we're seeing printing of money going on at the Fed. So that should devalue the dollar. We're already seeing weakness in the dollar. This being dollar denominated and a safe haven asset is going to hold on to that value, at least for right now. I would not expect us to go down into the 1600 handle or anything of that nature. I think we're going to try and hold on to 1800 for at least the foreseeable future. Then we move on to the VIX here. We got the VIX coming off, and that's because I already kind of let the cat out of the bag. Equities are higher on the day. It is a Friday. Last Friday I talked about it. We looked like we were going to see some weakness heading into the close, as nobody, generally speaking, recently wants to hold on to equities over the weekend. We don't know what the market's going to react on Monday to information revealed over the weekend. So a lot of people do have a tendency to cover those trades heading into the weekend. Last weekend we didn't see that. Last Friday, which I did expect, it's summer markets rush to the Hamptons in the afternoon, which we'll start seeing here. Volumes start to slow down, but it was like the retailer came in and saved the day for the equities on Friday. Are they going to do it today? I don't know. It seems a little bit weak. There just doesn't seem to be a whole lot of participation in the market right now. Also, we're heading into earnings. Next week is going to really be the key week to start earnings. We're going to be starting to trade those I'm going to be starting to trade earnings. So I'm keeping my portfolio cash on the sidelines right now, not allocating anything ahead of that because I like to trade those earnings. So I think we might see some of that going on right now as people are going to be gearing up for the earnings season and waiting for next week to really start playing anything going forward. Now, do a little bit about the earnings that we're going to see. Yeah, we are not going to see good earnings coming out of these companies. What it's going to really be dependent on is, can these guys speak positively enough to the overall market or to the investor as to what their forward guidance is. It's going to be about forward guidance. It's not going to be about what their earnings just were. If they beat the earnings estimates, then that's going to be like the cherry on the cake. But really what people are going to be looking for is how they are going to navigate this new type of paradigm that we're going through. All right, so Dow just slightly higher on the day. We've got the NASDAQ moving up by about 100 points, so it's leading the charge. That tech sector that I've been talking about, that tech sector rotation, I still believe in that. I think that people are looking at this parabolic move that the tech sector has had and are going to want to cover, especially ahead of those earnings. We do have Microsoft coming out with very interesting that they are going to do a new type of gaming where it's online. They're kind of going to follow that whole Epic Games where you can play with your friends online and make that a little bit more robust. So we'll be seeing what they're going to be revealing there coming up shortly. But the NASDAQ almost up 1% on the day, and E-mini S&P is up 0.5%, but up 18 points, right in the middle of yesterday's range. So really quiet. Yesterday, late in the day, we did see the market start to make some moves as heading into the close. We got that sell-off towards those lows of the day to make that candle look pretty red. Today, overnight inventory got long. We got that economic data, which wasn't too bad. Building housing starts, that was pretty good. CPI was right in line with expectations. We did see the University of Michigan consumer sentiment come in a little bit lower than expected there. And that was probably the catalyst to really start to sell us off it was sell the news on that. But immediately a real quick snapback as I think people started saying, hey, you know what? The consumer is probably thinking that they want another round of stimulus, as those stimulus checks have already been spent. Unemployment, the bonus unemployment right around the corner coming off, so some people probably getting a little bit nervous about that. But once the investor came in and started rebounding, we've gotten that move back into positive territory where we were actually in negative territory earlier on. So that's all we've got going on right now. I'm just keeping an eye on my portfolio. Like I said, I am not adding anything or taking anything off at this point in time. We are starting to see the markets settle down already today. But I do want to hold that money for earnings coming up. So I'm not going to add anything right now. We could probably take a look at a couple of charts. What's Twitter doing today? Unchanged on the day. Pretty boring, like I said. Coca-Cola is starting to make some moves here as, they are the reopening trade. And as people, because 50% of their product are sold through the stadiums and restaurants, bars, things of that nature. Pepsi has been doing very well, but they are the snack aisle, right? Which is the stay-at-home trade. Coca-Cola being the reopening trade. I've got Coca-Cola in my portfolio for that reopened trade. It's just not been able to get above 50. I do expect it to start moving, and they've got earnings right around the corner as well. So we're going to have to see what they're doing. Normally, I'd be looking to do some covered calls on this, but with that earnings right there, I don't want to step in front of that ahead of that earnings right now. So I'm just going to write it out. All right, so that's all I got for you guys. Check out the webinar today. We are going to be doing something with Wealth 365. It has been a full, massive lineup all week. Hope you guys have been able to take advantage of that. Also, go over our disclaimer. I am not here to solicit you guys to buy or sell any of these products that are in my portfolio. What I'm trying to do is teach you guys the environment, the guidelines to implement options into your strategy. So let's follow those and then follow your assumption and your gut, which is what I always think to say is the driving force of any trade, really, to be quite honest, because it is something that can drive and process a lot more data than our frontic limbic. All right, so that's about it. That's all I got for you guys. Hope you have a great weekend. If you don't, check out that webinar. And if you can't take that, take it easy.